What's up, everybody? So, D Murray here again with another video. I know it's been a minute since I made another video, but I just wanted to quickly show you guys super easy strategy for everybody to make money, right? Oftentimes, our biggest struggles is trying to go to bigger time frames to find support and resistance. We go to so many time frames to find key support areas. I want you to think about it like this. Instead of going back and trying to find random areas on this chart, how about we just trade in certain percentages ranges from either the opening of the daily or the opening of the weekly? If we consider ourselves to intraday trade or day traders, I would say the best one that I would like to use or show you guys today would be more of how to trade in directions of the daily candlestick move. I'll show you how to do it here in a sec, but before we get started, I wanted to jump into structure, right? So I believe if you're watching this video, for the most part, I hope you understand how to restructure, which is higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, higher high, and then eventually we jump into a downtrend, which is the opposite. Lower lows, lower highs, lower lows, lower highs, lower lows, lower highs, lower lows. And then in some cases, we see consolidation, right? Consolidation range. So basically, it's a range. Sometimes it pushes out just a little bit, but comes back down. And it looks something like this, ranging before a breakout ends up happening. So these are the and from three structure type of patterns that are inside of every market. And that's basically what we want to look for. Are we in an uptrend? Are we in a downtrend? Are we in a consolidation? So if I zoom out, we can kind of see the same structure points on H1 time frame. We see lower lows, lower highs, lower lows, lower highs, lower lows, lower highs, lower lows, all the way down here. Going into an uptrend, we see higher, this is basically a pullback for that downtrend, but it's higher highs, higher lows, higher high, higher low, high, high, big, higher low, and then it looks like a quick consolidation, look like this, pointing out just a little bit so you guys can see, boom, started consolidating a little bit in the range, and then it started making quick higher highs, but this is basically looked at as a range before it truly broke out from this upside and started making higher highs, higher lows, higher highs, higher lows. So with all that being said, I just want us to focus on higher highs, higher lows, or lower highs, lower highs, lower lows, or consolidation. Quick, easy structure that I just went over. I didn't want to go too far in detail with it, but look at this. So whenever we are looking at the news channel, or it can even be like on Yahoo, Google, any news source, they always talking about Dow Jones, aka US30, been up 1% or up 1.3%, up 1.6%, or up 2% for the month or for the day or whatever it is. They're talking about price been in some type of percentage. For them, they are talking about the push. Let's just go for the day. So even if we look at the top of here, we see a lot of things in percentage, but this right here shows you how far it pushed from the previous day. So this previous day closing. So the previous day, this candlestick that I'm on, it closed here. So let's highlight that. Let's highlight it. So it closed here. And this next day, which is this candlestick that I'm on, it pushed how far away from that previous day closing? It pushed about 1.15% from the previous day closing point. So it pushed just over 1%. As you can see, it closed around 1%, right? But overall, the news outlets are giving us this information in percentages. It's not really giving us, the information as far as, I mean, it does give you current price, right? But it mainly give us this information as far as 0.01% from the previous day closing. So my logic is if I know we're going to push at least 1% daily candle, how can I kind of like trade in that direction before we even get to that 1%? Right? If I'm looking at a quarter marks, how can I get in at a 0.25%, 0.50%, and then 75% before we actually get to that 1% daily range, right? So with that being said, all I've done was search deep into the indicators, and what I've seen work best is this indicator called anchored percentages. So it'd be this one. So anchored percentages, Spaceman BTC. You'll click that. I already have it downloaded, so I'm not gonna click it. I'm gonna just open it, and this is what it looks like, right? So again, let me open it up just to make sure. So right now it's anchored for daily, which is what we really want to look at. We want the anchor point to start from previous day close. And it kind of be kind of confusing. So the news outlet and everyone else does talk about the closing price of the previous candle, but I like it to be on open. So I normally keep mine on open. Deviation, basically this, I got it on both. So you can see from the opening price, we got 1% going up and then we got 1% going down. I like the opening price, right? And normally the opening price, if we're looking at this area, should be the closing of the previous. So closing or opening really doesn't matter, but I like to use the open because I then know now we opened here and then we want to see it push towards the 1%, right? So going back to the actual indicator, I'll leave it on open, got both 1% and on beyond, going up, the line's going up to 2%, 3%, all the way up to 10. And then text size, I just have it on normal. Like I said, the difference right now, and I have it on 1% from the opening price. But with the strategy, we would really want to have it on 1.20. So this is when we become a day trader. So once I click this, you'll see these lines over here become shorter. And all it is will be just the distance calculated up to that 1% and beyond. So I'm gonna click it real quick. Boom. So now looking at that same daily candlestick that we were looking at, we can now see that here is the opening price. Boom. And now we see that in between that range is 2%. Then we got 4%. Then we got 5%. Looking here, then we got 8%. I'm sorry, I said 5 previous, but 6%. Then we got 8%. Then we got the full 1% range and beyond. So everything that is from opening price here to 1%, boom, we now have the actual lines and the percentages that it pushes past in order to get to that 1%. So in theory, the logic that I'm trying to push forward, or the logic that I want you guys to see, is that if we know that the daily range is going to push close to 1% each day, why not try to get in at these points? It's already set for you, right? Use the percentages, 20%, 40%, 60%, 80%, to catch trades in those directions, which are a great amount of pips, right? So if we have open price here, we say, okay, once it breaks above 0.2%, I'm gonna take the trade and we're gonna ride this to at least a 1 or 2, which would be 0.6%, aiming for 1% overall, but we aiming for that point zero. I'm sorry, we're aiming for that 1%, but I'm gonna get out at 0.6%, right? So this is the logic. Let me scroll down to 1 minute. Not the 1 minute, but the hour chart. Or really, let's just go down to, you know, M5. And I'm gonna clear off the charts. So basically every single day, let's look at it here. So every single day, price will open up here, right? It give you this dotted line symboling that price opened there. And once price opened there, went up, came down, created double bottoms, you would say, and then it started trending what? Uptrend, that structure area, that structure points or structure markups that I just showed you, it started trending up. And you, however you want to see it, but I like it only because you can now see when the market is going up. You can now see when the market's going down. You can also see what percentages are always these are your support and resistance, right? So if we're looking for uptrend, it's going up, even broke through resistance, right? Used it as support, started trending up again, and then eventually we start to see some retest in the same area, right? You say, okay, this is this area right here is a retest of support. We broke through. Now we're using it as support. It started trending up, but then we broke through it again. When we broke through here, now we know that if you break through support or resistance, it has to be retested. So now we would take what? A sell to trade it back down. And like I said, this helps out too with these lines and these percentages being the certain way every single day from the opening price. It helps you with the actual overall structure of things and risk to reward. So now I know if I'm going to take this trade here, I can put my stop loss at the next previous right level, and then also aim for a 1 and 2, which would be kind of like this. So now I got my risk 1, gain 2. As you can see, 2.01 really doesn't matter. Close enough. I can get in here and get my 1 and 2 and get out. Even gave you a 1 and 3, right? Push to negative point 0.2. Right. So that's basically what the strategy is. If we know that every day the market, and it's not a every day that is going to get to the 1% range, but we can now use these as target areas, or you can highlight them and call them golden zone areas, right? So it'll be either we're going up or we're going down. A lot of other confluences can be however you see the market, right? Everybody's different. Everybody trades the same. But if I was like, okay, the previous day it was look like we closed above this previous day open. So if I say yesterday was a buy candle, let's verify that on a daily on US30. So yesterday, yep. So yesterday was an actual bullish candle. So if I'm on M5 for this current day, I can say, okay, yesterday was buys, buying candle, it opened. So now I'm looking for only buys this day. So I would take buys here, aiming for 1 and 2. Boom. And then, yes, obviously, I think this was news or whatever it might be. We could have got to some highs, but eventually fell down, right? If you go to the daily candle, you really don't see a lot of back and forth. Normally, if you see, let me delete some. Normally, whenever you see a bullish candle, it's followed by another bullish candle. It's followed by another bullish candle. When you see bearish, you see red, 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 right? So that tells me if the previous day was red, I'm obviously looking to trade in the same trend. So I'm looking to take sales at every 1.2, 1.4, 1.6 to trade in the same direction as the previous. Right now, it looks like it's pulling back. The previous day was bullish, but now we have a bearish candle looking like it's pulling back a good amount. And if it's pulling back this deep, right, obviously that tells us that we can take more entries, right, and try to get a huge risk to reward, you know, underway. And just looking at, and this comes with experience too, right? The market opened here, it retested here and took off going there. And even before, as you can see at the bottom, even before 9 o'clock, which is down here, we really didn't have any wicks, right? We didn't really have any wicks up under for the daily candle. Think about that, right? If I let me turn this indicator off real quick because I want you guys to really see this. On every daily candle, you get a wick both ways, right? You get one to the upside, one to the downside, one to the downside. This one is one of the only strange ones that shows you that the bullish was strong, that we really didn't get a wick to the upside, but everyone else has a wick to both sides. If we go to the opening price, which is shown on the indicator, it opened here. And before 9 o'clock, which is kind of that opening for the London section, for New York session, we didn't really have any wicks before that time period. So we know that we have to create some type of wick below, right? So if we didn't have a wick from London and Asian, 9 o'clock or NYC might be going down, right? You know what I'm saying? So now all I would do is just like, okay, wait for 9:30 opening. It show this bearish movement. Look at this bearish M 5 minute candle, pushed all the way down, came back, retested point uh point two percentage, and we could have took the sell, got the one and two, and could have been aiming down here for even more. But since the previous day was bullish, we know that overall this is just a liquidity grab, and we can now trade back in the right direction. So once we got that spike down in here, we just waiting on structures to show us higher highs and higher lows. Boom. We kind of got that break again here with the bullish momentum in this candlestick here. And once we got that, then we know we got a better chance of trading in the right direction going from here to there. Right. So that's kind of what it takes to be an expert type of analyzing expert trader, if that makes sense. So like I just wanted to show you guys that it works, right? And you can use it in your best interest because now we can take sales here, put stop loss here, and we can catch one-on-ones or try to get one to twos. And even sometimes this has just been fair. This is how you stay consistent, is by using the next previous level as your stop loss or your TP. But eventually you can start doing things like this, cutting down the stop loss and getting a one and three, even though it's two levels, or you can get that one and two and call it a good trade and say, hey, I got a one and two. Same thing over here. So opening started here, which gives us this line going across. And before 9 o'clock, which was 9 o'clock is here. What is the trend showing us? Higher highs, higher lows, higher highs, higher low, higher high, higher low, higher high, higher low, higher high, higher low, higher highs, higher low. Why would I be looking to sell? Right. So now I'm just looking for this level to break. Right. Boom. And even then, I can just put in a buy limit or pennant order for there. Stop loss will just go the opposite level, and this goes up 2 levels. So now I got my one and two, and I just let it ride, right? And like I said, in most cases, it do aim for 1%. We got here to stay, right? So it's either you aiming for that 1% or you aiming for this bottom 1%. Same down here. And what you tend to see is that a lot of big moves, especially during NYC, if we haven't made a big move yet in New York, if we haven't made a big move yet in Asian or London, that NYC will retest the opening price and just take off, right? I tend to stay away from taking trades at this level, right? Because it can bounce or it can use it as resistance and continue to trend down. I like to watch when let me use another one. I like to use trade once we break the 0.2 percentages. So as soon as we start to break out of it, we know that that daily candlestick is going to either go towards that 1% range or it's going to go to 0.8 or at least 0.6. So now my trade will look something like this. Boom. All right. So now I got a 1 to 2. Same over here. This goes back to what I was just telling you. If we haven't made a real move during Asian or London, then we know that NYC is going to, let me go back to 9 o'clock. 9 o'clock is here. We know that NYC is going to break out and go towards those 1% or 0%, 1% up or 1% down. But we don't really want to take the trade around this area, right? We don't really want to take it at the opening because at that point, we don't really have a bias. It can go either both ways. So we wait until the 0.2% is broken. And as you can see, we kind of got it. We got it broken at this candlestick here. And now we just, as soon as it breaks, we take the retest immediately. Stop loss goes one level and we aim for two, right? So now we got a 1 and 2 risk to reward. It took a long time, but hey, it's better than thinking, right? So all of this, it took 3 hours and 20 minutes for that whole move to play out. But who knows how much money you can make within those 3 hours. And plus, it's easy, right? It's systematic. As soon as we see the break, we take it immediately and we just don't change anything. What I like to do is call it iron sight trading, right? Iron sight trading is what I call it. We wait. As soon as we get that break, I aim. So it'll be something like this. We know that we don't trade around here. We wait and hold on, wait. 9 o'clock opening. So now we know 9 o'clock is around the opening price. We now wait because we want to see a breakout at this point two, this positive point two, or we want to see a breakout of the negative point two. And whenever we do get it, which we got it right here on this candlestick here, we wait, we got it. Boom. Now we know that it's a great, the odds are in your favor to take the trade on a retest, which would be the aim. We set up our aim, which is basically our 1 and 2 risk to reward, and then we strike on that retest. So we wait, broke. We already got the aim set up. And as soon as it touch here and there, we strike. Boom. Now we're in this trade. And now we just let it play out however it plays out. Right. So that is basically how I'm starting to see the market. And you can just play around with it, right? You can do sometimes you can do the weekly, right? Let me go to a bigger time frame. So if you wanted to like play around with the anchor point and use it on a weekly, right? It's going to change up a little bit. And now you're catching more pips because now the weekly opening is here. And now, and like I said, on a daily, the point twos work, but on a weekly, I would probably jump to like halfway marks of that 1% overall. So now I see support and resistance. So now I know we're going to, and think about the weekly candle. If it's going to be a bullish weekly candle, we have to see what a spike or a wick first. All of this right here, and I'm going to show you real quick, and I'm going to adjust this instead of going all the way right. I'm going to show you that everything up under the opening been this orange horizontal shape box. Hold on, sorry. So all of this right here is nothing but a wick on a weekly candle, right? Let me make it bigger so you can actually see it. Hopefully you guys are understanding where I'm coming from, but everything that's on this weekly candle box, let me delete that out the way so you can see the wick. You can actually see that wick. All of those candlesticks that we've seen on the daily is nothing but a wick for the week. Why? Because the weekly candlestick opened here. And if we're looking for the previous week, previous week was bullish. We're looking for bullish momentum to continue for this week. I have to see some type of wick, which is basically a retest of some area, which now we kind of can pinpoint those areas because we now have this anchor percentage spaceman BTC, indicator. I know that we have to go down, retest an area. And after we do so, I can start taking trades here, which are already set up for me. And I can get that 1 or 2 risk to reward again. Or look at this, 1 and 3, 1 to 4. It's already set up for you, right? Does it work every single time? No, but it is a great strategy to use and it's systematic. So you don't have to truly think. You just have to know how to look at structure, right? Same thing up here. You see it open here. It didn't really give us the wick that we wanted. So probably would have stayed away until we got a move like this first. Boom, retested, then broke through, then started to trade up under the 50%, which I probably would have tried to take here. But some trades is really, like I said, is never picture perfect. But in some cases, you can say, okay, or you can add an indicator, right? Add some indicators on as far as moving averages and just grab a 1 or 2 every single week, right? I really don't like trading at the opening because it can go either way. But as soon as it breaks the zero point 0.5, probably would have lost this one. That's just been honest. But that same trade that we took that ended up being a loss here ended up being a winner here. Just probably double down, right? Wow. Got that money back plus more. So yeah, go back, look at it. This is weekly trading, but I like to do it on more on a daily because I want to just get in and get out on my daily. But remember on a daily, you got to make that adjustment back to 2.0 and remove everything. And then now you can lock in on M5 and just take trades level to level, kind of like the old strategy that I showed you guys. Because we can clearly see that these levels are getting used as support and resistance. And now it's just a matter of knowing which direction to take it in, right? But it shows you the actual risk to reward. So it gives you the risk to reward, right? Boom. We need a downtrend falling. So now it's just a matter of just taking it systematically. Don't even think about it. We're in a downtrend, broke up under 0.2, boom, take the sell, making money. So yeah, that's basically a strategy that I wanted to show everybody. It does work. Will it work all the time? No, maybe not, but it is a great strategy, great information, great way to look at the markets without having to truly go randomly back or looking at different support and resistance areas and trying to, mark off areas that might not truly be right. So any area on the market can be support and resistance. But if we look at it as percentages, it could help us out. So that's all I wanted to show you guys. I hope you guys enjoyed it. If you can go play with the indicator, and let me know which levels. I think the point two works best. But if you find that, 3.7 does work good for your type of trading or your type of style, then let me know, right? Just one-on-ones are good. Don't let nobody fool you. If I can say, okay, I want to do a one-on-one from here to there and have a one-on-one going opposite, I'm saying, okay, 2K is what I want to risk. 2K is what I want to gain. If you're confident and you see that the market is actually trending up, I would take that one-on-one every single time, right? So to become a trader, you basically are designing your own style, your own type of way, and just adding confluence after confluence to be more than 50% confident that the market's going to push in some certain direction that you believe it will. That's all what trading is. Because if I put a random or put my 3 month year old baby, or let's just say a 1 year, or let's just say a 5 year old, it's a 50-50 chance for him to make money. He can either go up or it can go down. So our job is to figure out if it's going to go up or if it's going to go down. What confluence can we add to make it go in that direction that we want to aim in? And now it's about risk to reward, right? So now we don't want to put on too much risk to where if we lose, which we are going to lose, we're without or we're too far down in the negatives to the point we can't make money or to be a hard time chasing a dollar, right? So we just want to make sure risk to reward is key, right? And then we can use these levels as far as entries and exit points. So let me know what works best for you. Comment below and peace out, man. Thank you.